Florida, you're on the money line, and you're also a Madoff victim looking to rebuild.
Hi, Carmen. I belong to a pipefitter union in upstate New York that has about 600 members. We entrusted all our hard-earned pension and welfare funds to a financial firm that in turn invested with Bernie Madoff. Collectively, we lost about $50 million in our union funds. I am worried that I'm going to wake up one day and my pension that I worked for all my life won't be there. At this point, I'm still receiving my pension, and I'm waiting for more information from the union. But I'm wondering, what recourse do my fellow union workers and myself have to try and recover all or part of our pension money?
Well, Jeff, I'm going to go to you first on this one in terms of legally. Should they band together? Is the union have to pull together and make this a full suit together, or is this something Don can pursue on his own?
Well, normally the pension administrators who rely upon financial advisors can actually look to financial advisors under the Employee Retirement Income Security Act, we call ERISA, and they had a fiduciary duty to check out the investment in Madoff before they did it. So there actually may be some insurance there that may be available to the pension fund, separate and apart from the Madoff case, and I would certainly urge the pension fund to get counsel to look at that. And then secondly, obviously, believe it or not, the pension fund itself may have insurance for the folks who administer it that could be responsible directly to people like Don. So obviously they should look at that. But obviously Don has got to do what everybody does, which is you may have to look for a job. You're certainly young enough to do it. And at least in my profession, I've hired, older Americans. They turn out sometimes to be some of the greatest employees because their kids are out of the house. They want to work. They're eager to work. And I say to America out there, don't be afraid to hire somebody who's retired. They make great employees.
And you know what, and Doug, you have the pensions, they do have that insurance.
Well, and Don, do you know if your pension was covered by the PBGC, which is the Pension Benefit Guaranty Corp? Do you know if it was protected by that?
No, I don't know. I know the building trades up there, there were several unions that were involved in this. Collectively, they lost $354 million.
Well, it's really important that you get on the phone and find that answer out. In fact, that PBGC does cover about 44 million Americans in 30,000 pension plans. So a lot of them are going to be covered with a guaranteed income for life. So the income that you're getting right now in that pension, you can find that out. You, of course, want to get it in writing. And anyone who has any concern whatsoever about their pension, that's the first thing I'd want to find out. You find out if your bank is FDIC insured. You find out if your investment account is SIPC insured. You want to find out if your pension is PBGC covered.
PBGC. Okay. So, Don, make sure you look into that and keep us posted. Thank you so much. Ellen, you're on the money line. You're not a Madoff victim, but you lost a tremendous amount of money to the market, and you're looking to recover and rebuild.
Hi, Carmen. I love your show. I've learned so much from you. My husband and I, we've been extremely worried as we have watched our nest egg diminish. Stephen was laid off last February after 31 years on the job. He received 6 months severance pay and has been on unemployment since August. Prior to May, he was invested in his company's 401k, which was 95% in stable money market funds in preparation for our retirement. In May, we were talked into investing our 401k into a variable annuity with a market lock. Our financial advisor says he wishes he had more of his money in this type of account. Anyways, we've lost over 40% of our account value. There's a penalty for early withdrawal. Our financial advisor insists that we haven't lost a dime. We are truly in a panic about how to proceed with our retirement savings. Our question is our money secure in this investment? Should we cut our losses and invest in a Roth IRA to begin rebuilding our portfolio? Okay,
Ellen, what really kills me about your story here is that you had protected your money so much in that money market account, and now you're someplace else where, Jennifer, I think let's explain to Ellen, because if he's saying she hasn't lost any money, but she has, this is a variable annuity, Ellen. So explain to her a little bit how they work and how he can say that.
Well, Ellen, I can't, I'm just, oh my goodness. I'll try to stay in my chair while I answer this question, and I'm very, very sorry that this has happened to you. Variable annuities are very confusing, and they seem to be so simple to understand. You put your money in, you have a variety of investment choices, they grow tax deferred, and then you could have an income for life when you start to withdraw money. But really the catch is when you can get that income, and there's special features within a variable annuity that make them tax deferred. So to take the cost of those features and put them inside of a 401k or an IRA is just completely wasting your money on those features. With this variable annuity, probably the best thing to try to do is to rebuild from here. Look at what your surrender value is. There's a cost for keeping the variable annuity per year. So there might be some options where you can stay in the variable annuity for a little bit longer, but in a safer option, maybe a money market option or a fixed option, kind of bleed out a little bit more of that surrender value and then surrender it next year or the following year where a little bit less of that surrender value is the surrender charge is being applied.
Doug, you want Ellen to go a different way?
Yeah, you know, Ellen, apparently you had a fixed account and you went into something that was very aggressive in order for you to lose about half your money in this annuity. But one of the things annuities do, and there are some times, believe it or not, that they actually do help people. And in your case, if you put in a certain amount of money into the variable annuity, one of the things you're paying for is insurance protection. And now it may only kick in two places. One, if you pass away, you will absolutely get back, your beneficiary will get back at least what was put into that variable annuity. So if you lost half your money and you passed away, your beneficiaries are going to get 100% of what was put in there back. Now, you don't want to have to die to get all that money back.
Well, I was going to say, because this is, I mean, he's advising her about, this is retirement money, right,
This is retirement,
Ellen?
not the beneficiary's retirement.
Carmen, what really bothers me is this. When I hear somebody say, oh, you haven't lost any money, plus you have this market lock, what they're talking about is that you get the higher the value of how your mutual funds do or the market index as a whole. The problem is you're not going to get the market lock index unless you either annuitize or die. So I think that's very misleading to the public.
Yeah.
Variable annuities for years have been the source of a lot of cases brought by my firm.
It's not exactly true. In fact, market lock, what it does, and I'm not advocating it, and in most cases it doesn't make any sense, but what it does is it will give you a guaranteed income for life off of your original principal. So here's a situation where you put in X amount of dollars, it's worth half, and you can take income for life at 5 or 6% off of the original principal you put in. And that's why they're going to say, oh, well, don't worry about it because you take income. The problem is you have to start taking income for life, but you can get it off of the original principal. Anywhere else you go, if you lost half your money, you can't get income for life off of a number that used to be your account value.
Well, before, Ellen, before you make any moves, and you do have to rebuild from here, but first of all, I want you to go and research as much as you can, read the fine print on this product that you own and that you have, and make a decision. And make a decision from there. So know exactly how it works and get someone else to advise you as well, a different advisor who's not making any money off of that annuity. Thank you so much, Ellen. Thanks you, Jeff Sohn, for joining us. And your bottom line here is when it comes to rebuilding, the sooner you get started, the better. Much more after this.